Good evening, everyone. Santil here. Can everyone able to see my screen and hear my voice clearly? Thank you, Arfan. Thank you, everyone. So we are entering into the technical classes now. So we are going to start with the candlesticks properties. So it's my humble request is please do not ask irrelevant questions because whatever the topic I'm going to take, I'll take one time, I'll take two time, I'll recap one more time, so that everyone can able to understand uh, in the same session itself. In case if someone is joining late, or in case if someone didn't understand the current session, you can go and watch the complete session one more time. After that, or there is another one more slot for clarification also. So we will learn on that. Yeah, global market we will learn now. Yes. So today we are entering into the technical classes. So please give me full time to teach. To whatever I know, let me teach everything. Okay. So global indices, very simple. You can see this link, moneycontrol.market.global indices. Okay. Yes, we can have all the questions at the last, or you can come into clarification sessions and we can discuss everything. So this session, this 2 hours, please give it to me. Okay. So coming back, global indices. So global markets are interrelated to Indian market. Say like, for example, if you see last year fully global market, so our Indian market was supporting global market. So it is completely interrelated. So just a minute, let me show you. Google money control global market. You can open the first search. Just I'm doing it from first, that's all. So if you see, there is a, just a minute, let me minimize the screen so that so Singapore Nifty, where it is not there. Okay, Singapore Nifty is here. So SGX Nifty is nothing but Singapore Nifty, which is getting, our Nifty is getting traded in Singapore Exchange. Okay, our Nifty is getting traded in Singapore Exchange, and more or less this Nifty and our Nifty will be in the same price. There will be very minute difference. Next. So global markets, main thing to be noted is, markets to be noted is, you can see here. So once our market is closed, I'll start from here. Our market is closed by 3:30. After that, you can see Singapore Nifty will be on till 6:30, 7:30, and till evening, late evening, it will be market hours. You can check it till late evening. You can see Singapore Nifty. Now, as of now, from the market which is closed from our market, how much? 8925. 8925. Here it is 8869. Almost like 56 points is negative. From the market where we have closed, it is 56 points negative. So it shows tomorrow it will be a bearish mode. So it is not yet confirmed. So now after 7:30, we have to see the US market. You can see this is US market, American market. You can see Nasdaq. It's open. It's opened on April 14th. So now once today market opens, that is after 7:30, 8 o'clock, you will know the actual situation. Yesterday it was 4% up. Maybe if it is crashing in a bearish condition, so our Singapore Nifty will again go further down tomorrow morning. So once this, by seeing this tomorrow morning around 7:30 or 7:30 till 9 o'clock, we can understand what is the current situation of the market. Dow Jones, Nasdaq, you can see anything. Both are European, both are US markets only. No need to see everything. Okay. So next. So once that is open, our market will open in bullish or bearish mode as per the global cues. So once that is done, by 12:30 or 1 o'clock, European markets will open. So assume that our market is 1.5% negative, say like 80 points or 100 points negative, and European market is also opening a negative. Our market will go still more negative. There is a chances to go 120, 150 points to negative. So it's all like a interchange related. So Say like for example, morning our market is positive by 50 points, and following that European market is opening in positive and 1.5% positive. Our 50 points market positive will take it to 100 points positive. So this is how it is related. So what else? We can't commit that since global market is negative, our market will not be positive. There is a chances when news or something comes, it will change. It will change. Okay. It will not be opposite. It will not be exactly. It will not be opposite. Global cues are completely interrelated. So other than this, that Asian markets, you can see Japan market Hang Seng. So other than that, it's not required. It's not required. Other than all, also less weightages. Singapore Nifty is SGX Nifty is our Nifty. Singapore Nifty is getting traded in SGX Singapore Exchange. Our Nifty future is getting traded in Singapore Exchange. Okay, so that's it about global market. So any more details, you can Google it. This much is sufficient. More than this, no need to take any news. That is not at all sufficient. That is not at all required. So as of now, what I do is I see the chart stock Phoenix setup, and I see this market, global market. Just by seeing this, I trade. I trade in the sense I predict the market. So now we will enter into the technicals, that is candlesticks. We are entering into the technicals, that is candlesticks. Before that, we will learn curve theory. Okay, so curve theory, we are entering into curve theory. Okay, just give me a moment. See, curve theory is very simple. Okay, if you Google it, there is nothing called as curve theory in Google, or nothing related to stock market. But this is something whatever we have ourselves from Stock Phoenix we have created. Okay, so see, generally how market moves in trending. We need trending stocks, upside, downside, upside, downside, upside. So this is how we require stocks or market to behave. Once if we see these kind of things only, we can able to make profits in trading or swing trades. Okay, we don't want a stock. Again, I'm repeating, we don't want a stock which is keep on going. Identifying this stock is very difficult. We don't know whether it will give profit or not, and it is like I'll tell you, absolutely forget these kind of stocks. We will not get these kind of stocks even once in life. So this is the actual fact. I'm telling you on a delivery chart. Okay. So what we require is we need a trending stocks. We need a trending stock. So that is what we require. So now, what is curve theory in the sense? Identify the curve. So what we have to do is for identifying the curve, take daily chart for 3 to 6 months. Take a daily chart for 3 to 6 months. Just a minute. Take a daily chart for 3 to 6 months. That is, open a blank chart. Open a blank chart. So, chart in the sense, it's a candlestick pattern. It's a candlestick pattern. Okay. So, take a daily chart with a series of 3 to 6 months. It can be in between 3 to 6 months, but 3 months is mandatory. 3 months is mandatory. No indicators required. And from now, we will be discussing or we will be learning only on daily chart for the next 10-12 days, not even 12 days. Next 15 days we will be learning only on daily chart. Don't ask me what is the time frame. I didn't speak. Don't ask me what is the time frame. Can we change the time frame? I will not answer for any question, any such questions. Daily chart. So from now for the next 15 days, we are going to learn on a daily chart. It's for Nifty, anything. Okay. So if you are going to analyze where the Nifty is, open Nifty chart, and the current month is April, and from here we have to take last 6 months. So 1, 2, 3, 4, 5, 6. Approximately there is 6 months. Approximately 6 months is sufficient. It can be 5 months, it can be even 3 months, that's fine. Okay. So now here you draw a box just on the top of the chart. Roughly, there is no metrics. Roughly draw a box on the top of the box and draw a box on the bottom of the box. So this is called as top of the curve, and this is called as bottom of the curve. Very simple. Take daily chart. I'm repeating. Take a daily chart. Let it be Nifty, let it be Axis Bank, let it be Ashok Leyland, whatever the stock or whatever the index you want to evaluate. You want to see the trend. Okay. So open a daily chart, 1 day chart, and take the chart in this screen. In the current screen, it can be any software. Screen, it should be 3 to 6 months. In the current screen, the view should be 3 to 6 months, and roughly mark a box on the top and roughly mark a box on the bottom, in the bottom. So in theoretically it will be coming like this. In theoretically it will be coming like this. Just a minute, let me open. In theoretically it will be coming like this. You can see here. So market, what it does is always it have a trending phase. Market always have a trending phase. So it goes up, it comes down, it goes up, it comes down. So when we see market is in the top of the curve, so this is called as top of the curve. Do not go for a long here. Do not go for a long here. Whenever you feel that, yesterday we discussed, the moment I buy the stock, it is going in loss. The moment I buy the stock, it is always started falling. That is nothing but the reason is you are buying the stock in these areas. You might have bought the stock in these areas. That is the reason it is always started falling, or always it is hitting the stop loss at the moment you start buying the stock. Next, when you go for a short, if you go for a short in the bottom levels, what happened? Already the stock is done enough drop in the last 15-20 days or 1 month or 2 months. It will start bouncing. It will be waiting for the situation to bounce. So you should not go for a short in the bottom level. You should not go for a short in the bottom level. Always we should not short in the bottom level. Very simple. Open a daily chart for any stock or any index, anything it may be, and take a chart duration of 3 to 6 months. Take a chart duration of 3 to 6 months and roughly draw a box in the top of the curve and in the bottom of the curve, top and bottom. So this area is called as top of the curve. This area is called as top of the curve, and this area is called as bottom of the curve. So in top of the curve, we should not go for a long. In top of the curve, we should not go for a long. How to fix the size of the curve? Just now I told very clearly, just in a simple way you draw a box. In a simple way you draw a box. Roughly you draw a box. I am showing you what is the doubt here after you are having. I'll show you one more time. I am just opening one more stock. When I ask questions, everyone can reply. You can just see now. Okay, just see now. Simply draw a box in the top. Nothing like dot, nothing like a box. You draw a circle. Very simple. Mark 2 zones. That's all. This is top. This is bottom. So in this place, we should not go for a short selling. In this place, we should not go for a short selling. In this place, we should not go for a long. So my theory is very simple. The stock has already made enough downside. Don't go and short the stock here. Don't go and short the stock here. Maybe the stock, if the situation is not well, still the stock will go down. But I am not worried about trading in that kind of situations. I will not go for a short in this particular place. In general, okay, I am not using any indicators. In general, as a layman, just by opening a daily chart in any stock, I can able to understand this is not the right place to go for a short, and this is not the right place to go for a long. So what if in between? What if in between? In between, you can trade long and short as per technicals. In between, you can trade long and short as per technicals. So this is the place we should not go for a long. Maybe this stock will go even this much high. I don't bother about this. I don't want to participate in this kind of trading, because from bottom level, the stock has already traveled 15, 20, 30% upside. I don't want to take the participation at the top of the chart. At this place, I don't want to go for a buy. Whoever's tell you, very clearly tell that, very clearly you can ignore that. This is not the place for me to enter the trade. I will not buy at any cost in this kind of places. Same like that, this, as per the current situation, this is not the time to go for a this is not the time to go for a short selling. It's not for a short selling. Okay, so the first step of technicals, before you choose a stock, before you enter, okay, the first site, what you have to see is, you have to see the curve theory. You have to see the curve theory. That means if, when you see this particular place, you are not supposed to go for a short. When you see a chart in this particular place, you are not supposed to go for a long. And when you see the stock in the median phases, this places, you can buy, you can sell. Yes, this rule is applicable for intraday and positional. This rule is applicable for intraday and also positional. Okay, so hold your questions, why you are so aggressive? It's not, I can see only your aggressive questions, not your eager in learning. I have not completed this, right? Okay, so let me take you multiple examples. So now the stock is in top of the curve or bottom of the curve? Can we buy the stock? Can we buy the stock? No, see, basic common sense. Basic common sense we have to use. All, it's not midway, sir. It is already gone up. It's not midway. It is not midway. Even if this stock is going to reach 1,000 rupees, I will not bother. I will not invest in this particular stock in long. Okay, you can see this chart is from September, October, November, December, January, February, March, April. It's almost 8 months. When you see in this from October, this stock, this particular time, it is in the top of the curve. So we should not go for a long in this particular stock. Now only all news channels will come and tell pharma is going to boom, pharma sector is positive, go and invest in Biocon, go and invest in Sun Pharma. This is where the moment you buy the stock, it is crashing. Okay, next. Let's see different stocks. Please remember this. Okay, let's see different stocks. So now it's in long or short. Yes Bank, don't touch Yes Bank, sir. It's a dead stock. It's a dead stock. It's a dead stock. So it is in long. This particular stock is in bottom. This particular stock is in bottom. Did I ask you to mark the line like this? I told you to mark a box like this. Box should be good. It should be like enough big. So that the screen can be bifurcated into three phases. We can do like this. One, 2. So it's in the top, it's in the bottom of the curve, it's in the top of the curve, it's in the middle of the curve. So now this particular stock is in the middle. This particular stock is in the middle. Just give me a minute. Let me draw a clear line. Just give me a minute. Top, bottom, middle. Okay. So if you see here, this particular stock is we have long opportunity for this particular stock. Don't look for a short opportunity. If the market is bad, let this stock goes down. So now Sun Pharma, tell me. It's in top. Very simple. This stock is in this stock is in top. So this is the place where we can go and sell if we get a technical opportunities, or else I will not go for long. See, I am telling very clearly, I am repeating one more thing. I am teaching here in this curve theory, we are supposed to learn what not to do. In this curve theory, we are supposed to learn what not to do. If you learn in stock market, it's not only in curve theory. In stock market, if you learn 100 things what not to do, there will be only 2 or 3 things will be left out to do. You will end into profit. Very simple. When you get a stock, you should find 50 reasons to reject that. That is the prayer. That is a good trader. As a good trader, you have to do that. See, top of the curve, bottom of the curve, middle of the curve. So in this place, if there is any technical parameter you might have bought, it has reached the destination. That is, it has reached the top. See here, is that working? After drawing the line, I have taken Sun Pharma. Is that working? Yes or no? See here. You want, I'll take another 5 more charts. It's a no indicator, nothing. It's a very layman explanation. Just a minute, let me draw a line. I deleted by mistake. Is that working? See, after reaching the bottom, it is reversing. After reaching the top, it is coming down. So now it is in the middle of the curve. Now if you have any technical support, you can buy or you can sell. Middle of the curve, you can buy, you can sell. Sir, this is a very basic, like the first letter of the alphabets. With here itself, we can't settle. Don't ask 100 things in this basic thing itself. It's a very simple thing I told. Draw in the middle, draw 3 lines, 2 lines in the chart. Consider the above one as the top of the curve, below one is the middle of the curve, and see, the chart should be like this. Very simple. The line should be like this. The box should be like this. Okay. What not to do? What not to do with this? We can see. Lochel, when you join the session, by what time you join the session? 7:10. So please don't ask question if you joined late. It's my humble request. Not only for Lochel, for anyone. It's my humble request. Please join on time. Or in between, don't ask the questions which we have discussed already. We have discussed earlier. See, 21 days manage time, guys. It's very important. Okay. So it can be done for all the stocks, all the scripts we can do. So now, can we do something in pharma? See here. Exactly, all the pharma sectors are in rally. So very simple. This is not the right time for an investment in pharma sector, because it is already given big movement. It is already given big movement. Okay. So let me read what is. See, very simple. It's a 2-line concept. Don't take too much of don't take too much of things. Nitin, Asian Paints, you can do. After this class, you do 100 things. Who is going to ask? See, curve theory, identify the curve. First, identify the curve. Take daily chart for 3 to 6 months time frame. Okay, take a daily chart of 3 to 6 month time frame. It's a daily chart. It's a daily chart. And top of the curve, do not go for long or buying. Do not go for long or buying. Very simple. In top of the curve, do not go for long or buying. In bottom of the curve, do not go for short or selling. So that means can I go for a shell? Can I go for a short selling? In the top of the curve, can I go for a short selling? No. Wait for signal or entry. What is signal or entry? It is, we will be learning that on a trade setup. Bottom of the curve, do not go for short or selling. So that means can I go and buy? Don't buy, wait for signals or entry. Clear? So with this, I'm closing the curve theory. If anyone have any doubt, please watch the first 30 minutes, 25 minutes, again, one more time in the recording. It's very simple. In a box, I am bifurcating. Just a minute. I'm just doing a small recap. It's very simple. If this is the daily chart, divide into 3 parts. Top of the curve, bottom of the curve. Don't go for short here, short is not allowed. Don't go for long here, long is not allowed. So whoever whatever tells, just ignore. Very simple. Clear? So let's close this. Let's enter into candlesticks. We are entering into candlesticks now. Very important topic. So many of the students may know what is candlesticks, the properties of candlesticks, and you might be using the candlesticks, but the way what we do, the way how we use is completely different. Maybe it will be common in some futures, the properties are common, but generally how we understand the concept, that is very different. If you understand the candlestick, it's like half work is done. If you understand what is candlestick, half work is done. Are we clear? If you understand the candlestick, I'll tell you half technicals has been done. It's not only a candlestick, it's a price action. The candlestick is nothing but the movement of bulls and bears. We can tell everything by seeing by just seeing a candle. We can tell everything what is happening in that particular stock for that particular day. Okay, so just give me a moment. Okay, so now just give me a moment. So first important is understanding the curve theory is very important. After that, we have to see the candlestick patterns. Okay, so let me start. So the very important first factor in candles is, so I am going to tell everything on daily chart, daily candle, daily chart. The lesser the time frame, the reliability is less. I'm repeating, always we use everything on a daily chart for the next 15 days, intraday or changing the time frame. For positional, can I keep 4 hours, can I keep 15 minutes, can I keep 1 hour candle? Nothing doing, only daily candles. Okay, for the next 15 days only daily candles. And if you are effective in daily chart, then intraday will be done. Intraday learning will be done by default, and it will be a very easy thing for you. So daily chart is the basement, and all the readings from now, whatever we are going to do is on a daily candles. So the first moment when you see a red and green candle, okay, before entering into the candlestick, let me show you the different type of candlesticks. Okay, so let us take Nifty. So just for an example, whatever the candlesticks, whatever we are seeing here is a Japanese candlesticks. Traditionally we are using this many we can say like 99% of the traders, if anyone is doing their analysis on chart, 99% of the traders are doing with these Japanese candlesticks only, and very few will use line bar and all. It is very difficult. OHLC, it's very difficult. And hollow candles. So there are different Heikenesi, very popular are Heikenesi and Renko charts. Okay, so these kind of different candles are there. So we will not be using anything. We have one strategy on HAC, that is Heikenesi, that is for intraday. That will come only on the intraday part at the end of the session, and we will not use any other thing other than this candlestick, Japanese candlesticks. Okay, so now coming back, so this is the Japanese candlestick. Okay, so now here there will be only two colors, one is red, another one is green, and in some places we can see a type of candle which is called as doji. There will not be any color. So ideally 99.9% there is only two color, one is red and another one is green. And so this is the general colors which is appearing in Kite, Upstock, Sharekhan, HDFC Securities, ICICI Securities, everywhere. If you use some abroad for software like MetaTrader or AmiBroker, different codings, they'll be using red and blue. Instead of green, it will be used as blue. So no big change. Just if you see, if you could able to understand red, it is a downtrend. Always remember that when you see a red candle, it's a downtrend. When you see a green candle, it is a uptrend. A very basic first psychological visual understanding. Okay, visual understanding we can see when you see a daily chart. When you see a daily chart, and when you see that particular stock on that particular day, when it is a red candle, never ever go and buy that stock, Nifty, Bank Nifty, index, future, option, anything, currency, everything. Are we clear? When you see a daily chart, that particular day candle, if it is red, that particular day we are not supposed to go and buy. Are we clear? Can I get one line of confirmation? So this particular day you can see Nifty at this place. Can I go and buy Nifty? So straight away we are breaking the first rule. If you buy Nifty here, very simple, there is no need to understand anything, no big technical, nothing is required. You are straight away you are entering into the wrong direction of the market. Are we clear? So many asked how to understand the direction. No, sir, I'm telling about today. Why you are telling about yesterday, sir? In today's current day, okay, when you see a candle, the current market price, this particular time frame, say like 11 o'clock, 12 o'clock, 1 o'clock, sir, don't ask 100 questions, sir. It's my request. Just say yes or no from what I thought, what I'm teaching. Why you are asking yes, what happened to after 12 o'clock, after 1 o'clock, what about yesterday's candle? Why you are asking different questions? Are you a question banks? I'm teaching just now. I have started. I'll complete everything, right? So I'm telling very clearly. Please give me time. See, I can take it like one side presentation, but it will not be useful for you. I want to make the session interactive, but unless you respond to the relevant question, it will be very difficult for us, sir. Okay, so coming back, this particular time, say like for example 11 o'clock by today's morning, when you see the candle is red, don't go and buy, because it clearly indicates today market is in downtrend, this stock is going down. Same like that, this particular place, okay, that OHLC we'll see later. Okay, this particular place when you see by 11 o'clock or 12 o'clock, or this particular place when you see by 3 o'clock, don't go and short that particular stock, because it is telling very clearly that I am in a long trend, I am in a bull trend. Forget about tomorrow's prediction, day after tomorrow's prediction, what happened yesterday. In today's current situation, okay, The moment, see, we will not put buy order for day after tomorrow. We will not place a buy order for day after tomorrow, today itself. No, we will place an order today. In the current market, when you place an order, you see the daily candle, and if it is red, never ever buy. And if it is green, don't go on short. Very simple. The first level of understanding of on stock market. Red in the sense downtrend, green in the sense uptrend. It should be a daily candle. Okay, so it's a daily candle, current day candle. It's a daily current day candle. Next. So now we are going to read about the anatomy, the properties of the candlestick. How we are having two hands, two legs, one face. So like that, what is the properties of the candlestick? What is the properties of the candlestick? When you see a green candle like this, just a minute. When you see a green candle like this is called as Marabuzu candle. When you see a green candle like this is called as Marabuzu candle. That means there is no tail. It is a full complete candle. I am telling there is no green color, so I am marking this as a green candle. This is called as a Marabuzu candle. That means there is full swing buying has happened. Full swing from the open till the close buying has happened. When you see the same candle in red, when you see the same candle in red, that is also called as Marabuzu, and this is green Marabuzu and this is red Marabuzu. Okay, so there is no tail on that particular candle. Okay, there is no tail on that particular candle. So let me come back. Okay, so you can see here, this is the body of the candle. This is the body of the candle, real body. This is called as a real body. This is called as real body of the candle, and this is called as tail or wick. Tail, shadow, wick. We can tell as tail, shadow, wick. Again, this is lower shadow, lower tail, lower wick, upper shadow, upper tail, upper wick, and it's a red candle, downtrend. It's a green candle, uptrend. Body is again same, real body, upper shadow, upper wick, lower shadow, lower wick. So if someone asks that much, it is over. It is not like that. In this candle itself, there are many things to learn. I'll just recap whatever I told now. Okay. I'll just recap whatever I told now. When you see a red candle on a daily chart, when you see a red candle, it is a downtrend. And when you see a green candle, it is a uptrend. Don't go opposite. This is the first place of identification. This is the first place to understand how market is moving and what is the direction. Okay, so that is number one. So don't reduce the time frame of the candle. Don't increase the time frame of the candle. We don't have any study based on weekly chart and monthly chart. We have study only based on daily chart and lower time frames. So don't use lower time frames. As of now, it is only on daily time frames. Okay, so this is called as real body, lower tail or lower wick, upper tail or upper wick. Same like that, green real body or real body, upper tail or upper wick, lower side or lower wick or lower tail, lower shadow or lower wick. So the body remains same. Both are common for red and green, and also upper tail is upper wick is same and lower wick is same. So there is no big changes. Okay. So now the important terminology what we have to learn from the candle is OHLC. The important terminology what we have to learn is OHLC. I'll come to different things. I'll come one by one. When there is no color, I'll come. When I complete one by one, I'll come. Okay. So OHLC. OHLC. So you can see here the full form of OHLC is open, high, low, close. Open, high, low, close. So now let's understand. To understand the OHLC, Assume that market opens. I'll tell you in without taking the big numbers. Let me tell you in simple words. I'll tell you in simple words. Okay. So you can see here. First, let me show that in candle. This is the open. If it is a red candle, if it's a red candle, the open will be always on top. If it's a red candle, the open will be always on top, and high will be always on top, whether it's a red candle or green candle. Whether it's a red candle or green candle, high will be always on top, and low will be always on low, that is on downside. Whether it's a red candle or green candle, low will be always on downside. See, it's a very simple. High means on the top, low means on the bottom. Next, for a red candle, close will be always on the bottom. For a red candle, always close will be on the bottom, and for a green candle, close will be always on the top. Okay, so now let me draw some indications to show an example. So you can see here, market opened here, market opened, it went high till here, but could not able to sustain the high. Short selling came, everyone started selling, market came down, came down, came down, and again came little up and closed here. So now it is a red candle or green candle. Open, close. I'll not mark high and low, because high will be always on the top, low will be always on the bottom. So it's a red candle. Whoever told it's a green candle, please correct yourself. It's a red candle. Okay. Let me put one more time. Let me put one more time. Just a minute. So you can see here, market opened here, went down till here, and closed on the top. Day end. It's a, now what is the candle? Open is here, close is here. Close and high are same. So it's very simple. So it's very simple. It's a green candle. So let me tell you one more examples. I'll give you many examples. Just thank you, thank you. Let me explain you again. Market opened here, say like 1000. Market opened on 1000. The price on 1000 went till 1010. After that, started coming down. Again, it came to 1000. It went to 990 and closed at 995. Open, close. It's a red candle. Very simple, right? Market opened at 1000, went low till 990, and went high till 1050, and again came down to 1040 and closed. So this is a green candle. So this is what we have to understand. So now this is one daily candle. This is one daily candle. So now let's differentiate this daily candle into 5 minutes. That means, let's see, if this candle was a 5-minute chart, just to make you understand the trend, understand how market is getting operated. Okay, opened, went high till here, again came down and closed here. So this is how it will be. That is bifurcating the one daily chart into different 5 minutes candle. Okay, forget about even this. So now who didn't understand OHLC? Now only those members who didn't understand OHLC, they can respond. Others no need to respond. From now, if you don't understand, if you understand, no need to respond. Only if you don't understand, ask only the relevant question. So everyone is clear, right? I'll repeat again. Opened, went down, and again came up, closed. So now what is the candle? Red candle, because open is above, close is below. Close is below. So it is very simple. Sir, it's a daily candle. It's a daily candle. Okay. It's a daily candle. Market opened here, went above. Sorry. Market opened here, went above, and closed here. So now this is what candle? Satish, please call Siddiq sir. It's a Marabuzu candle. It's a green candle. So let's remember that it's a red. It's a green candle. Okay. So this is the basic understanding. See, candles will tell you the story what happened in the market today. Candle will tell you the story what happened in the market today. Okay. When you see a candle itself, you can able to understand what happened in the market. What happened in the market. Say, like for example, open completely down. That means full day it was a selling, full day it was a selling, or full day it was a round downtrend. Market opened. So opened in the sense open will come in left and close will come in right. Okay, open will come in left and close will come in right. Marabuzu. I'll give you the notes. I'll give you the notes. Okay, it's a red Marabuzu. Marabuzu, forget it. Forget about the candlestick names. Names and all we will learn later. So I'm repeating again. The first point of identification on technicals is very simple, the candlesticks. Without seeing candlesticks, don't do volume research, don't do open interest, don't do whatever it may be. First place, what you have to see is curve theory. First place, what you have to see is you have to see the curve theory. Understand which place the location is, which place the stock is, whether it's in a buy rate or whether it's in a sell rate. So which place it is. So next, see whether it's a green candle or red candle. If it is a red candle, it's a downtrend. If it is a green candle, it is a uptrend. Very, very simple. Next, this is the body. This is the body. Candlestick properties. This is the body. Upper wick, lower wick. Again, it's a green candle body. Upper wick, lower wick. And green candle represents uptrend. And market or stock is going down or market or stock is going uptrend. Next, OHLC. This is very, very important. This will tell you what is the current situation of the market or what happened in the previous day. So if you see the previous day candle, we can understand what happened on the previous day. Open, high, low, and close. That is very, very important. And when you see a red candle, don't go and buy. When you see a green candle, don't go and sell. Very, very important. Okay. So with this, the properties is over. Now we will go and see what if candle is big, what if candle is small, different types of candle, all those things we will start learning now. So candlestick. So this sheet will be given. Okay, this sheet will be given. You can read this completely. You can read this completely whenever you have time. So obviously it is not required. If you attend this session, this sheet will be just for your reference. Okay. So now coming back, it's like a recap. See, whatever we have learned, it is there here. It's a bullish green candle. That means uptrend. It's a bearish red candle. That means it's a downtrend. Upper shadow, lower shadow, real body. Next, candlestick properties. When we see a green candle, it indicates uptrend. When we see a red candle, it indicates downtrend. So always the uptrend, the candle will be in green. Downtrend, the color will be in red or uptrend, it will be in green or blue. Downtrend will be in red or pink, something it related to. Mostly you can see red and green. Okay, next, body size. So now this is where we have to understand what is the what is the difference between a tall person and a short person. So like this we have to correlate. Okay, so We have to understand why. If we see a person who is very tall, we have to understand he can reach the top, he can reach the ceiling or fan, he can touch the fan very easily. If it's a short guy, then what? So like that we have to understand the different things. So body size. The body size represents the degree to which the bull overcomes the bear, that is green candle, or the bear overcomes the bull, that is the red candle. A larger body shows the increased commitment. You can see here, when you see a larger body, this means, when you see a larger body, this means we can understand this candle, sorry. When we see a larger body, we can able to understand this candle, this particular day, the buying is happening on a full-fledged way. The buying is happening on a full-fledged way. When you see a small real body, when you see a small real body, the market is in a consolidation phase. The market is on a consolidation phase. So let me draw it again. When you see a real body, that means market is in a trending phase. When you see a small body, market is in a consolidation phase. Yes, it is uptrend only, but we can understand the difference between 1000 to 1050 and 1000 to 1010. So still it's a profit only, still it's a uptrend, it's a small uptrend, but when we see a big real candle, it gives a big commitment. Commitment in the sense high movement, big movement. That's what I told you, right? This, the intraday chart will be like this. The movement will be like this. For this, the chart will be like this. So only here we can make profit. In the consolidation phase, we cannot able to make profit or loss. Big loss will not happen. Big profit also will not happen. The body is, if it is a green candle, if it is a green candle, and if the body size is big, then the bulls are more. Bulls in the sense the buyers are more. It's in a bullish mode. And if it's a red candle, then bears are more, then it's a bearish mode. Okay. So the bigger the candle, it is good. It shows the good trend. After you buy, say like for example, you bought some stock at this particular place. You bought some stock at this particular place. You bought here. The next day you are seeing like this. Then hold the position. We can hold the position because full swing buying is happening. Next 2-3 days, we can able to make good profits. So we'll understand that one by one. We'll understand that one by one. Okay. So coming back, range of the candle is distant. So now range. So what is the range? Yesterday we have learned about range, right? We studied about P analysis. At that particular place, we learned about the variation or the range or the volatility means the difference between the high and low. So high is 1010, low is 950. So now what is the range? What is the difference? 60. Very simple. So high is 1010, low is 1000. So now what is the range? It's only 10. It's only 10. So this is what, if the range is big, we will have good opportunity to play. We will have good opportunity to make profit. If the range is small, we cannot able to make big profit. Again, it's called as a consolidation or a sideways market or a sideways market. Yes, consolidation, a flat market will have a narrow candle. Okay, you can see here the range of the candle is the distance from the high to the low and represents the volatility of the price during the trading session. The wide range shows increased volatility. The narrow range shows reduced volatility. See now, after this session, please, I'll post this sheet. You should go through this complete sheet one more time because while we get into the candlesticks, I'll not be explaining the line one by one. I'll make you understand how the candlesticks works. You can read the psychology, the examples you can read by yourself. So next, shadow location. Now this is very important. So let me recap one more time. Candle definition: green is a buying candle and red is a selling candle. Real body, upper shadow, lower shadow. Candlestick properties: green candle means uptrend, red candle means downtrend. Body size: when we see a big real body, that means it's in a bullish mode, full strength buying is happening, and it's in a trending phase. When we see a small real body, then it is sideways or consolidation market, but still it is not still it is a buy only. When we see a green small candle, it's in a buying, and red small candle, it's in a selling, but still it's in a consolidation phase. Range: the range is nothing but the difference, the distance between the high and the low, which explains you the volatility. When there is more volatility, there is a higher chances of trading good. There is a good opportunities to make good profits. When the narrow is, when the candle is narrow, that means the trading opportunity is very bad. That means the moment we buy, it will be in the price, it will be just above the price or below the price. So what happens? If we will not we will lose time. We will not book profit, we will not book lose loss, we will lose time. Next, shadow location. So shadow location above the real body shows the rejection of the prices. So shadow location. So now this is the place where OHLC again comes into role. Okay, this is the place where OHLC comes into role. Listen carefully. Here we can see the upper shadow. Okay, we can see the upper shadow open. Market opened here, went high till here, but could not able to maintain the strength. So it started falling down. It started falling down. It started falling down and closed here. That means there is a price rejection on the top. Are we clear? There is a price rejection on the top. When you see, this is for this particular example. So let me draw in intraday wise. Market opened, it went high till here, but after that it's a complete crash. Next, you can see here, for this, market opened, went high till here. No, market opened, came down till here. Okay, let me draw here. Market opened, came down completely, and again the low level buyers started coming, again came up. No, I am drawing wrong. Market opened here completely, there was a crash and closed here. That means in the lower level buying came. Is that right? Whatever I have drawn, I'll explain you one by one. Market opened completely, it came down, and the lower level buying came and closed here. Market opened, went high, but price rejection came on the top, and again completely came down and closed. Here price rejection is at the bottom, that means buying. Price rejection is at the top, that means selling. Are we clear? So I'll draw an intraday chart for this. You can see opened, went up, completely it came down. Here, if you take this, opened completely, it came in crash and closed here. Is that right? See, very simple. What, how NSE is doing? See, it's not about red or green. It can be red or green. It can be red. It can be green. See this chart. See this chart. It's an intraday chart. There is no time frame. There is no time frame. I am marking like this. I am marking like this. I am marking. Okay. I'll mark one more time. It's not for red candle. It can be green candle. It can be red candle. It can be green. It can be red. Okay. So shadow location shows the rejection of prices. Shadow location shows the rejection of prices. Shadow below the real body shows the rejection of lower price in buying, and shadow above the real body shows the rejection of higher prices, that is selling, short selling, and shadow below the real body shows the rejection of the lower price, that is buying. Okay. So next is, any doubts still here? Explain shadow for green candle. You can see here, market opened, went down completely, and after that it went up and closed here. Price rejection on bottom. Okay. Again, you can see here, market opened, went down completely, went up completely, and closed here. So price rejection in bottom and also in top. So more price rejection is on bottom. So it is a sign of buying. What if candles are green? I have explained. Can you explain? Hold your questions. Can you explain the same with green candle? I have done. Similarly, green candle I have done. Wide and narrow range candle I have explained. I asked, I guess you miss. No, sir. Post the question again. Uh, this is not a pin bar candle to understand the price rejection. So let's come back. Let me read the questions. Just a minute. Price rejection in bottom means we can buy, and price rejection in top means we can sell. Okay. We should avoid days range candle. It's a daily candle only, sir. It's a daily candle. Okay, hold it. I'll show with examples. Okay, hold your questions. I'll show one example for a price rejection on bottom, one example for a price rejection on top. Okay. You can see here there is a price rejection on top. There is a price rejection on top. You can see opened, went high till here. Again, price rejection came. It closed here. After that, from next day, selling started. You can see here price rejection in bottom. From top, it has came down. Price rejection in bottom. Okay. So these are the examples for price rejection. So next, so so next is candlestick patterns. Candlestick patterns. So it's a very important candlesticks. Very important. It is candlestick patterns. Price rejection can happen in top and also in bottom. Okay. Even if you see this candlesticks even for 100 times or even 1,000 times, you will not remember. You will not remember. So what I have done is in my office, I have taken this this particular sheet and I have taken a printout and I have kept in front of my table so that I can always see that. This is the sheet which I have taken printout and I have kept in front of my eyes where I can able to see that. Okay, so till you learn, keep this sheet always with you. Till you learn, keep this sheet always with you. After the class, I'll post you. After the class, I'll post you. Okay. So you can discuss in group. You can discuss in groups. Okay. So let's start with the candlestick patterns. Let's start with the candlestick patterns. The first candlestick pattern is doji. We have seen red candle, we have seen green candles. Now, doji is something like there is no real body. So generally it will be black or light green or light red. So from now, remember one thing, whatever the sheet, whatever the sheet we are learning, right? So this is a printed sheet and it's an example. So however we are teaching, however we are learning, right? This will not be same in the live market. In very simple, doji means 1 plus. This is called as doji. But mostly 95% this will not come in the real charts. I'm repeating, this is the actual doji which we are seeing in the printed sheet, but like this it will not come in the real chart. So there will be a small difference of 5 to 10%. It can be up to 15%, but more like that, more than 15% deviation we should not consider. For example, let me show you doji. We can consider as a doji. We can consider as a doji. This is perfect doji. This is perfect doji. We can consider as a doji. We can consider as a doji. This is not a doji. This is, we can consider 85% is this much. Okay. 85% is this much. This is not a doji. This is not a doji. This is not a near doji. This is not a doji. Okay. See this place clearly. We cannot consider this. We cannot consider this. We can consider this. This is 85%. This is almost like 60% only. So it's not even 60%. 100% it's not a doji. We should have that kind of mindset. Okay. So please be clear how to see the actuals and the one which we are learning. So this is considered perfect, considered, it's not considered. Okay. So Don't ask questions here. Don't ask questions here. Please, please, please. I'm teaching with 100 examples. More than why you are having doubt. We'll discuss in the clarification session. Okay. So coming back. So we should know this will not be same in the real chart. This will not be same in the real chart. Similarly, there can be a small deviations. We can accept. We can accept. Okay. We cannot accept. We cannot accept. Are we clear? We can accept. We can accept. This deviation we can accept. If it is like this, we cannot accept. So please remember these things. Whatever we learn and whatever we see in the actual sheets, there will be 5 to 15% there can be a difference. 5 to 15% there can be a difference. Okay. So now doji means bullish or bearish candle reversal pattern. So it is like both the sides, joker of the card. Okay, it is like both it is like both the sides it will work. Doji means it's a bullish reversal and also a bearish reversal. And all these candlestick patterns is valid. All these candlestick patterns, I am going to teach very important thing. Please listen. I'm going to teach very important thing. Please listen, or else completely it will go wrong. Do not ask questions. Do not ask questions. It's my humble request. Listen carefully, completely. Make a note of your questions. You can ask at the end of the session, or else we can have the clarification in the clarification session. Now everyone is sitting in home. Please spend your time 4 to 5 in learning. Okay, coming back. So doji is an important candlestick pattern. This can be used as a bullish reversal and bearish reversal. And the purpose of candlestick pattern, why do we understand the purpose of candlestick pattern is reversal trading. That means when the market is completely falling, when the market is completely falling, and at the bottom, when we see a candlestick pattern, bullish candlestick pattern. Let me be a doji, let me be a hammer, let it be a bullish engulfing. Okay, so let it be any reversal pattern. When it when we see a reversal pattern, when we see a candlestick pattern in the bottom of the chart, or in the top of the chart, then only it's valid. So how much distance, everything I am going to teach you. Hold your questions. Okay. I'm repeating again. This candlestick pattern is not valid in a sideways market. If you see a daily chart like this, it is junk. It is not valid. It is having zero weightage. I'm repeating. When you see any candlestick pattern, let it be doji, let it be bullish reversal, whatever it may be, when you see a candlestick pattern on a flat or consolidation market, it is having a zero weightage. It does not have any impact. It does not have any impact. When you see the candlestick pattern in a falling market or in a rising market, then only it is having an impact. It should be at the end of the place. I'll show an example. For this, I'll show an example. What is doji? We will learn later. Just let's understand where to see the reversal patterns. In which place, if the reversal pattern is appearing, it is effective. This can be considered. This can be considered. So this is a doji. This can be considered because it is in the top of the curve. It is in the top of the curve. This also can be considered because it is almost in the bottom of the curve. This can be considered. This also can be considered. This is not at all to be considered as a doji because we can see significant real body. We can see significant real body. See, there is a difference between this and this. This is not to be considered as a doji. This can be considered as a doji, and the location wise also it is okay. This is not doji, not to be considered. This is not doji, not to be considered. Not doji, not to be considered. Okay, we have good places. I'll show you. You can see there is a trend down. It is almost at the end. We can consider, but it didn't work. Okay, we can consider this not to be considered because it is happening in the flat market. Not to be considered because it is happening in the flat market. Not to be considered. It's a doji, but not to be considered. There is no effect of doji. This can be considered because it's in the overall uptrend. It is in the overall uptrend. Not to be considered. It's in the flat market. Not to be considered. It's in the flat market. Okay. So this is how the role of the candlestick comes. The role of the candlestick comes in real only if it is in the top or bottom. The role of the candlestick comes in when the candle is in a top or bottom. Just a minute. You can see here, market is trending upside. When you see a doji, yes, it is valid. Market is complete downside. When you see a doji, yes, it is valid. Who didn't understand only this point? Don't ask different questions. Please do not confuse. Only who don't understand, you respond. Who understood, you can ignore. We have not yet learned what is doji, which location it is valid. Okay. See, when the market is going on a rally, and in the top, when you see a doji, in the top, when you see a doji, this is the one which can be considered. It's a valid signal. How to enter signal, how to put stop loss, everything we will see later. Yes, this can be clubbed in the curve theory. And when the market is in the down time, Sumit, what is the time to be find doji candle? From what time to be find doji candle? I didn't get you. Daily time frame. At the top and bottom, both red and see, doji can be red or green. It is irrelevant. It is irrelevant. Doji can be red or green. It is valid only either in top or bottom. If it is here, it is not valid. If it is here, it is not valid. How much reversal? Sir, very simple, sir. Did you understood this one? This one, don't ask different questions. Sadiq, you tell me, is it relevant question whichever you have asked? Okay, fine. It's like completely it's like relevant questions. Let me complete my part. You can go through the recording. Okay, one more time. I am not going to answer any of your questions. Simply you are asking everything, yeah. Okay, let me come back. So doji in the sense bullish or bearish single candle reversal pattern. Doji is a very important candlestick pattern. Bullish or bearish single candle reversal pattern. So the open is equal to or almost equal to close. That means opened, went high till here, went low till here, and exactly closed here. It's a perfect doji. Opened, went high till here, low till here, closed near to the open is near doji. Opened, went high till here, went low till here, just closed at this place. It is also a near doji. Can be considered, can be considered, can be considered. Opened, went high till here, came down till here, closed here. This is not a near doji. This is not a doji at all. This will not come into any candlestick pattern. Okay. So next, bullish or bearish single candle reversal pattern. What is single candle reversal pattern? With this one single candle itself, we can able to identify there is going to be some reversal going to happen in the market. So when you see a doji on the top, when you see a doji on the top, that is from market from bottom, if it is going upside, and when you see a doji on the top, we can expect market is going to reverse down. And when you see a doji on the bottom, and we can expect market is going to reverse upside. So it may happen, it may not happen. So that is how it is called as doji. The open is equal to high or almost equal to, sorry, open is equal to close or almost equal to close, resulting in no real body. You can see it is like a Christ. There is no real body. Indecision in market. What is happening in the doji? Indecision. So opened, went high, bulls, that is buyers are in control. After that selling started, sellers are in control, again buyers came. So there is a confusion. When you see a plus mark in candlestick, this leads to a confusion, that is indecision. So it can go upside. When you see a uptrend in doji, there is high possibility of reversing down. Even it can go further upside. There is both the chances. That is why it is mentioned as bullish and bearish reversal patterns. The open is equal to or almost is equal to close. Indecision in the market, neither bulls or bears in control. The doji can be found on the top or bottom. The gravestone doji, very simple. When you see a doji like this is also a doji called as gravestone doji. This will be found on the top of the market. If you find the doji, if you find this doji in the bottom of the market, that is invalid. And dragonfly doji is found on the bottom of the market, and if it is found on the top of the market, it is invalid. So very rarely we see those kind of doji, so ignore it. Very rarely we see these two kind of doji, you can ignore it. So very important is doji. Very simple. It's a doji, it's a doji, it's a doji, exactly it's a doji, it's a doji, or it happens like this is also a doji. So anything where you see something like cross or T or something like inverted T, everything is called as a doji. Okay. So next is very importantly, we will be learning about uh, different candlestick patterns. There are many candlestick patterns, but we will be learning about that later. But how to trade with this candlestick patterns? This doji and can be replaced by different candlesticks. It can be replaced by bullish engulfing. It can be replaced by tweezer bottom. It can be replaced by bullish harami. So anything can be replaced by doji. So the concept is same. How to trade with reversal candlesticks? How to trade with reversal candlesticks? That is what we are going to see now. Okay. So the first point of identification is analyzing the curve theory. Analyzing the curve theory. The first point of identification is analyzing the curve theory. So trading with signal candles. What is signal candles? These are all are called as signal candles, whether it may be a doji or a bullish engulfing. So other different candlestick pattern we are going to study later. With this candlestick, how we are going to trade, how to execute, where to put stop loss, how to trade only with candlestick pattern. That is what we are going to learn today. Okay. So A trending, okay, fine. This we are going to see in the Excel sheet. Okay, so we have learned about doji. So I'll just recap it. Doji mostly it will not be having any color. Similarly, like 85% can be acceptable as a doji. Similarly, 85% can be acceptable as a doji. Next, 85% can be acceptable as doji. Doji should be found in top or bottom only. If you see in sideways market, doji is not valid. So analyzing the curve theory. That means first of all, while selecting the stock, that stock should be either in top or in bottom. Or when you trade in when you want to trade in middle, if you are going to trade in middle, then that stock should be on different technicals. It's like based on moving average and other theories are there. But while trading with candlesticks, the stock should be either in top for short and bottom for long. Top for short and bottom for long. So analyzing the curve theory, trade with signal candles. What is signal candles? Doji, hammer, inverted hammer, harami, tweezer bottom. We can take yes, doji, hammer, inverted hammer, harami, tweezer bottom, bullish engulfing. So these are the very popular candlesticks where you can able to identify with our naked eye. That means no screener is required. Just by seeing a chart, we can identify this is an hammer, this is a tweezer bottom, this is a engulfing. We can identify very easily. So other candlestick pattern and all, it will be very difficult. We need screeners. So we are not going to use any other major candlestick pattern. This is the candlestick pattern we are going to use. Check for 5% low. I'm repeating, how to trade with candlesticks. That is signal candles. How to trade with signal candles. Trade with signal candle. Analyzing the curve theory. First, we have to see curve theory. If it is in the middle of the curve, this all steps will not happen. I'm repeating. You are seeing a chart, and if you see a doji here, yes, we can consider for reversal. But if you see a doji here like this, if you see a doji here like this, if you see a doji here, it is invalid. It is invalid. Okay. So please remember that the signal candles, that is trading with candlestick patterns, will not be effective in the middle of the curve. So either it should be in the top of the curve or in the bottom of the curve for more effective. You can also trade like this. If it is like this, if you are seeing a doji here, yes, above this we can go for a buy. But we have to see there is no sideways consolidation phases there previously. Now, signal candle identification. Identify the signal candle. Doji. Say like for example, we have identified doji. So let's take a live example. Just hold on. I'll show you with one live example. Let me try to identify some stocks. Okay, you can see this. You can see this particular thing. Please hold your questions. Please hold your questions and suggestions. Will come later. Okay, so this is called a signal candle. Just a minute. This particular thing is called a signal candle. Okay, so this is almost like doji. It is not exactly doji, but we can accept this particular thing as a doji. We can accept this particular thing as a this particular candle as a doji because we could not able to see significant big real body. It is like 90% it is matching doji. So I am convinced. Next, Number one, identifying the signal candle. Signal candle identification I have done. Next, check the swing low 5% and above in the last 10 to 15 days daily candle. That means this is the current market price. This is the current market price. Forget about these things. Assume that this has not happened. Okay, I just want to show you along with the performance. So I have taken. So hereafter I will show you some chart without in the current dates also. That is, check for swing low 5% above in the last 10 to 15 days. So that means from this place, the last 10 to 15 days daily candle, see if there is 5% and more, there is a drop. There is a downtrend of 5% or more. So that means how much? Let's see. The current market price of Doji, this particular place is 919. So 5% is approximately 50 rupees. So we should see whether there is a 50 rupees fall in the last 15 days. Yes, there is more than 50 rupees fall. So it is a valid signal candle and it is valid location. See this particular thing. See this particular place. So is the location is matching? Is the curve theory is matching? Yes, it is in the bottom of the curve. Next, it is a valid signal candle. It's a doji. Next, we have to see the downtrend. Is there 5% or more? Minimum 5% downtrend should be there. Why 5%? Because if there is a fall of minimum 5% only, we can expect 2 to 3% reversal. I'm repeating, why we have to see 5%? Because if there is 5% reversal, at least 5% reversal, 5% downtrend only, we can see at least 2 to 3% reversal in the next consecutive days. Okay, so next line. So signal candle identification, doji, hammer. Okay, forget about everything. Signal candle identification, we have identified doji. Check for swing low 5%. So who didn't understand this 5%? From this current market price, the minimum downtrend should be 5%. So how much? 920. 920 plus 50, that is 970. See, it is falled from more. It has fallen more than that. Since market was a big crash, there is a fall more than 50%. Forget about that. It's for our criteria is 5%. So it is there. Swing high, we are learning only about swing low. Don't forget about swing high. If there is a stock fall of 20%, yes, we can accept. In 2 to 3 days, yes, we can accept. But there should not be, before the signal candle, there should not be a candle like this. Before the signal candle, in 1 or 2 days, there should not be a fall like this. This is not selected because there we can able to see instability. The stock is not stable. If there is a huge gap down and next day we can able to see a signal candle, no, we cannot consider. That is, we can see instability in the stock. It should be a gradual fall. It can be more than 5%. It can be 15%, 20%. It can be even 50%. Minimum should be 5% from this particular place. It should be minimum 5%. Why you are asking me to see different charts, sir? I am explaining here. You tell me you understood here or not. Why we should see different places? 50% fall is fine. Is it meeting 5% criteria? Mr. Shanmukh, is it meeting 5% criteria? 50% fall, I know that, right? Is that meeting 5% criteria? Yes, it is meeting. Why there is different suggestions? Okay, coming back. So check for swing low 5% and above. Above in the last 10 to 15 days candle. Enter above the doji signal high on the next day. Green candle for long and volume should be in green. So we can make an entry immediately on the next day. We can make an entry immediately on the next day above the signal candle, just above the signal candle, not exactly on the high, just above the signal candle we can make our entry. Okay, so just above the signal candle we can make our entry. So you can see signal candle, there is more than 5% fall, so it is selected for a next day trade, and above the signal candle we can make our entry. Above the signal candle we can make our entry on the next day. So let's see whether it is triggered, So it is triggered. We can make our entry at this particular place. So now enter above the doji or signal candle high on the next day, green candle for long, and volume should be in green. So we have to check the volume. So here you can see there is no volume color. Add the indicator volume. So the volume also is in green, so we can make an entry. The volume also is in green, we can make an entry. Okay, the volume also is in green, we can make an entry. Now the twist is, so how much can be the stop loss for a positional trade? How much can be the stop loss for a positional trade? Stop loss will be just below the low of the doji. Stop loss will be just below the low of the doji, or 5%, whichever is less. So actually if it is 5%, we have to avoid, because that trade 5% is a little bit like maximum. Okay, so stop loss is just below the low of the doji, or 5%, which is default stop loss. Let's see how much is the stop loss. High is 965, low is 891. So it is more than 5%. Can we take this trade? Can we take this trade? No. Straight away this trade is rejected. Please remember, if the technical stop loss is more than 5%, don't go by the default stop loss, reject the trade. Whatever may be the profit we get, we will avoid this trading. Yes, after this entry we have gone some profit in the next day, but we will not take this trade, because you can see here the stop loss is high. Very clearly the technicals is indicating I am a risky trade, I am going to be a risky trade, so it is an invalid entry. I'm repeating again, the stop loss at this place, when you make an entry above this high, the stop loss will be the doji low. That is, when you make an entry at 967 or 970, the stop loss is 887, which is more than 5%. So we will not take that place. 5% is not on the closing basis immediately. Forget about closing basis. In the current market price, if the stop loss is hit by 5%, you will close the trade. Okay, so coming back, let me read these points and explain you with different examples. Let me read these points again and explain you with different examples. Analyzing the curve theory, the first point of identification, we should understand whether it's in the top of the curve or bottom of the curve, and we should select the stop. Next, identify the signal candles. Identify the signal candles, that is signal candle identification doji. Next, check for swing low 5% and above in the last 10 to 15 daily candles. Next, enter only above the doji, entry above doji, that is signal candle high on the next day. When you make an entry, the candle should be in green. The candle should be in, the volume chart should be in green. Next, stop loss will be just below the doji. Stop loss will be just below the doji. Ideally, technical stop loss should be less than 5%. Default stop loss is 5%, whichever is less. Just now, whatever the examples we have seen, in that stop loss is more than 5%. So we are avoiding the trade. Next, this is only for delivery calls. Delivery calls in the sense BTST and swing short-term positional calls only. It is not for intraday. It is not for future. It is not for option. Next, target of 5% or 1:2 as per your comfort. You can have a target of 5% or 1:2. Say like for example, if you are having a stop loss of 3%, you can have 6% as a target. If you are having a target of 5%, you can have 10% as a target. Trail stop loss once stock is in profit. We can make positions in delivery, BTST, swing. Before reading these 8 points, I got 25 questions which is completely irrelevant. So this is going to affect you only. Please understand. It's my humble request. See, it's a doji. It's a doji, but why it is not selected 1096? There is no 5% fall. It is a doji, but I have not selected this because in the previous 10-15 days there is no 5% fall from the top. 1094 1134, 5% is not meeting. Again 1094 1140, again 5% is not meeting. 50 points is not there. So let's learn only on delivery trading buying criteria. Selling we will learn later. Selling we will learn later. You can see this particular place. We cannot take this as a doji, as we can see here. Just a minute, let me see the high. Open is 914, close is 915. 2 points is there. Still we will not take this as a proper doji. We will take this as a proper doji. Okay, 915. This is the signal candle, and before the signal candle in the 10-15 days there is a 5 to 15% there is a fall. Okay, 5 to 15% there is a fall. So here we have a small sideways momentum is there. Here there is a small sideways momentum is there. If you want to be more than 95% of technicals, you should avoid this trade. Considering 85%, you can take. Okay, this is a signal candle. Above this, go for a buy. So when we see like this, the buy is not triggered on the next day, so the trade becomes invalid. When we see a signal candle, single candle reversal pattern, the trade should trigger immediately on the next day itself. The day after, it is not valid. Number one. Just a minute. Okay. Next is, this also can be considered as a doji. This also can be considered as a doji. Above this, we have to buy with a stop loss of this particular place. Stop loss, entry. Okay, let's see the percentage. Entry is at entry is above 924. Stop loss is 912. So my risk and reward is only 12 points. My risk is only 12 points, which is like less than 1%. 1.5%. 924 is my entry. My stop loss is 912. Almost like 1.5% is my stop loss. So I want to take this chance. You can see there is a good reversal. So same like that, I'll show you in different places. Just wait a minute. So when you trade in candlestick pattern, try to pick small stocks. Try to pick small stocks that is less than 500 rupees, so that you can see good benefit. You can see there is a good fall. There is a good fall. Let's see the doji value. Open 60.45, 60.8. We can consider as a doji because the body is not even 1%. We can consider this as a doji. So this is the signal candle. The entry of in this position is 61.2. That is this particular day. 61.5. We can make an entry with stop loss of 59. So the stop loss is less than 2.5, less than 3%. So I am entering this trade. I am entering this trade. So someone asked, what is trade setup? This is called as trade setup. This is called as trade setup, trading with candlestick patterns. It is not exactly a trade setup, but we can consider this as a trade setup. Like this, we will get many trades throughout the year. The moment you make an entry here, the moment the stock moves up, trail your stop loss, trail your stop, bring the stop loss here, bring the stop loss here, bring the stop loss here, and whenever the stock reverses or gives the against reversal signal, see, after a continuous green, it has start giving red, you can start booking profits. So this is called as trading with candlestick patterns. So you can have a risk reward ratio of 1:2, 1:3, even 1:5. You can have a risk reward ratio. So where to have risk reward ratio of 1:5 in the sense, when you see this particular place, my stop loss is only 2 per, my stop loss is only less than 2%, 61, 3%. My stop loss is only 3%. This place have a reward of 15% target. So like this, every stock gives 2 entries in a year. Like this, every stock will give 2 entries in a year. So now we are taught to trade with candlestick patterns. Okay, now we are taught to trade with candlestick patterns. So you can start identifying the stocks. You can start identifying the stocks which is for next day. Don't trade. Still many indicators are there. Okay. So you heard something about plug and play office? Plug and play office. Plug and play office in the sense everything will be there. Everything will be there. Just we will go and sit. If we take our computer, table, chair, fan, AC, everything will be there. So just you rent the place, go and sit with your laptop, start working. Like that, we are going to fix air conditioner, we are going to fix table. Like this, we are going to start learning about one indicator in every day. After that, we will compile everything so that you will have a clear picture. No intraday. Don't ask about anything about intraday. It's for delivery trading. If your stop loss is hit, exit the position. No more trading on that particular stock. Stock in the sense that particular re-entry is not done. If stop loss is hit, trading is closed. Okay. So coming back, let me recap one more time. Analyzing the curve theory. If the curve theory is wrong, no more further investigation, no more further research, we will close the trading. Next, trading with signal candles. What is signal candles? The candles which are called as doji, hammer, inverted hammer, which is a reversal pattern candles. Signal candle identification. Identify the signal candle. It should not be in a sideways market. Next, check for swing low 5% and above in the last 10 to 15 daily candles. Enter above the signal candle or doji in the next day. When you make an entry, the candle should be in green and the volume also should be in green. Stop loss will be just below the low of the doji. That is, it should be less than technical. That is called the stop loss will be just below the low of the doji is called as a technical stop loss, and default stop loss can be 5%. If the technical stop loss is more than 5%, avoid the trade. So somewhere ideally your stop loss should be in between 2 to 3%. If it is even 5%, avoid the trade. It's going to be a risky trade. This is only for delivery calls. No future, no option, no intraday. When you take a position, you have to hold it at least 5 to 15 days. Target of 5 to 15 days. Target of 5% or 1:2 as per your comfort. Trail stop loss once the stock is in profit. We can make a position in delivery, BTST and swing. Okay. So how to identify doji pattern? We can see here we have a screener. Now screener comes into role. Just copy the screener and paste in the Excel sheet, sorry, in the Google sheet. It will show you. What all the stocks are in doji today? So this screener is not showing any stocks. So what we do is we will take, there is a small modification can be done. So that was running only in future. You can do it in cash market and run the scan. So there is no doji stocks today, or we will see in one more scan. There is three scanners, three screeners is there. Daily chart doji, daily chart doji. Okay, here we are getting many things. So let's see whether can be accepted or not. Can we accept this as a doji? Escorts. Very simple, it's rejected. Very simple, it is rejected. IndusInd, RBL Bank, Cholafin. Rejected because enough there is a flat momentum. Enough there is a flat momentum. So this is rejected. Next. We can consider this as a doji. We can consider as a doji because now only flat momentum has started. Now only flat momentum has started. In this current market situation, we can consider this as a doji. And after seeing the doji, see there is a good fall more than 5% in the last 10 to 15 days. Tomorrow we can enter above this price. Tomorrow we can enter above this price 128.69 with a stop loss of 117. So now is the stop loss is small or big? 128, 117. So how much is the stop loss is more than 10%. So this stock is rejected. Very simple. When there is when it is not fitting as per technicals. So these are the things we tell as technicals. When it is not fitting, don't try to fit the stock in the category. Don't try to fit the stock in the category. So this stock is straight away rejected. Cholafin, Balkrist India. Again, we can see there is a enough amount of sideways market. See, it's like 1 2 1 2. So it is yet to come down. It is rejected. RBL rejected because of stop loss, high stop loss. Okay. Next. LIC, Hind Petro, PEL. It is rejected because it's in the swing high. It should be in the swing low. It's in the swing high. Again, it is rejected. You can see here, it is rejected. Maybe we can go for a short, but considering the curve, we should not go for a short at this place. Cholafin, yes, we can take. Let's see whether the stop loss is favorable. 163, 144. Again, the stop loss is high, so we are rejecting the stock. Okay, stop loss is high, we are rejecting the stock. Ideally, if you see, this is a hammer candle. This candle is a hammer candle. If someone knows, if this is the hammer candle, we might have entered here 137, 116. Again, the stop loss is high. We have to reject. So now the homework is identify 5 or 10 such stocks with proper stop loss. Even if it is in the previous sessions, it's fine. Even if you could able to see in the previous session, it's fine. So identify such 5 stocks, take a screen print, put a round mark and send it to support@stockphoenix.com. Okay. So let me summarize. We have learned about curve theory. We have learned about money control. So let's see what is the situation of the global indices. So it's 150 points negative, and SGX Nifty is again 98 points negative. Tomorrow we can see sideways momentum, sideways or a negative momentum. So we cannot able to see a positive momentum in tomorrow's market. However, we have to see tomorrow's morning SGX Nifty also. As of now, that is the conclusion. As of now, that is the conclusion. We can see sideways. Tomorrow, if there is a gap down, we can able to see a sideways momentum based on current situation. Okay, so let's meet in tomorrow's clarification. Let me tell you the supported stockphoenix.com. So I have sent you the mail ID that is there in this sheet. Send mail to support@stockphoenix.com. I'll upload this sheet immediately. So we'll review and we can send it. Thank you.